questions. That was near it. Right, I'll welcome everyone here today and call the meeting to order. Do we have any apologies? I don't think we're all in attendance at this meeting, because Councillor Dixon is not a member of this committee, the only councillor missing. Is there any declaration of conflicts of interest today with anything on the agenda? And confirmation of the agenda. We're working to a new template today, and confirmation of the agenda, I'm told, is everyone happy with the order the agenda is in, or do they have any questions about that? Okay, well, without that, we'll just move. First, I'd like to have Rian Rousseau introduce himself. He's Matt's replacement in Three Waters. So, Rian's just going to do a very brief introduction.
Do I sit? Mr. Chair, Your Worship, Honourable Members, thank you very much. I think my accent will give me away. So, we first came to New Zealand in 2009 from South Africa to Rotorua. I worked there for 10 years, basically starting with the lakeside sewer schemes or wastewater schemes. And then after a very interesting time there, joined the Western Bay of Plenty District Council, did some interesting work there on capital works. And then this year I was working for Tauranga City Council, but then my son and my daughter decided to make Dunedin their place, their home. My daughter married, and so I thought, oh, maybe it's a good time to change location and move down south. So thank you very much. I think that's probably good enough.
Yeah. Thank you, Rian. Okay, we'll move on to the first item on the agenda, which is the quarterly Treasury Management Report. Lorna, would you like to say anything about this, please?
Thank you, Mr. Chair. This is the quarterly report to the 30th of June. The key things to note are that at 30th of June, our debt was 55.1 million against a budget of 55.8. The cost of funds, or our weighted average cost of capital, has moved to 4.9% compared to the same time last year, which was 4.41%. But we have Miles with us, so I would defer to Miles to add anything he would like to. Miles.
Can you hear me all? See me?
Yes.
You can hear me?
Yeah.
Thank you. Thank you, Mr. Chairman. Thank you, Lorna. So I'll take it that the commentary is read. Have you got any questions on that? Because I can give you an update, because an awful lot has happened since then. So, are there any questions just on the commentary that appears in the report?
Councillor Gardine.
Looks like it's changed a lot. I'm just wondering how many swaps you've booked in.
We've put in 3 swaps of $7.5 million each at rates between about 358, was it, Lorna, and 377 or 378. I think it was, one was in the 350s, one was in the 360s, and one was in the 370s.
Yeah, that's correct.
That's correct, isn't it, Lorna? They were all done, obviously.
Yes, Miles, that was actioned last Friday.
Yeah. So yes, we have, and so we have taken advantage of the fall in interest rates. Would you like me just to give you a brief rundown about what's happened since the end of June?
Just a very brief one would be great. Thanks, Miles.
So we've had 2 or 3 big occurrences in New Zealand and overseas. In New Zealand, we had the Reserve Bank come out with the monetary policy review, and it's what was called a dovish statement. In other words, they were more sort of pessimistic about the economy, and therefore that pushes interest rates down. So it was a total turnaround from May, when they were saying that they should seriously consider raising interest rates. This one, they don't project future interest rates out every quarter. This was one in between those quarters, but they gave no indication really that interest rates would be rising, and if anything, that we were closer to the easing cycle. say 1% on the interest rates on, well, the debt's going up, and I think it's 60 million, it would be like $600,000 a year. But we can't achieve it across the whole of the yield curve. But if rates continue to fall, then we may be able to achieve it. And, I would really like to see the cost of funds, as I guess you were around about 4%. And as I say, we have gone part of the way towards doing that, but we can't do it totally at the moment. We have to wait just to see how this plays out. Next week we've got this week the employment data come out, and then we've got the Reserve Bank come out with their monetary policy statement, which will be a very good one, because we'll have to see if they endorse the markets pushing interest rates down. These are the longer term rates, or whether they wait a big stick and warn the markets that they don't see the inflation fight as being over yet, and warn them about pushing rates down. The OCR can only stay at 5.5, totally dictated by the Reserve Bank. The 90-day rate is very closely correlated to it. Those swap rates I just outlined, the markets can do what they like with them, and that's certainly what we call front-running the interest rate cuts. First cut is actually scheduled for October, and then there's the other one in November. The Reserve Bank in May scheduled, indicated the first cut would be fourth quarter of 2025. Now they must change that. I mean, if they didn't, then I'll be stuck. And they'll also lower the projected track of the 90-day rate. So that's the brief report from me. I can answer any questions or elaborate on anything you might want me to.
Anyone got any questions for Miles? Councillor Stringer?
Through you, Mr. Chair, to Miles. What do you expect is going to happen now over the past couple of days where we've had sort of crashes in the market around the world, especially the drop in the US employment rate and that sort of flow-on effect? Are we expecting further drops in interest rates here in New Zealand because of that?
At the moment, the markets are actually reassessing the likely future track of monetary policy in the US, and in other words, their Fed funds rate, that's the same as our OCR, and certainly the momentum is down at the moment. That US 10-year bond rate fell 17 points, 0.17%, which is a huge move in one night after the employment data on Friday night. So we do expect further falls in interest rates, but what I'm very conscious of is that, and I know I'm reiterating, sorry, repeating myself, but the markets are doing a lot of debt easing already with these swap rates and the forward start swap rates. And, as I said, the 5-year rate is 377, well the floating rate is 550. And that's very unusual if we have the swap rates, those long-term swap rates below the OCR. But it's those rates that produce these lower forward start swap rates that we're taking advantage of. So the answer, it's a wee bit of a difficult one to answer, but definitely the OCR will fall and the 90-day rate will fall. But how much lower the swap rates would go is the big question. And when will they bottom out? Because they're driven by the market, and the market always preempts or front runs what the Reserve Bank does. So when we're heading into an easing cycle, they will push those medium long-term swap rates lower before the Reserve Bank actually starts cutting rates. And conversely, as happened on the way up, they started pushing interest rates up before the Reserve Bank started raising the cash rate. So the key to this is which sort of formed the basis of our decision making last week, was to take advantage of these rates in the 350s, 360s and 370s. But so yes, short-term rates will go down. I think longer-term rates will go down, not by a whole lot, because it's already happened.
Councillor Gardine?
So the swap rates we've done is forward swap rates, and how long are they set for?
The ones that we did the other day, I'll just refresh my memory. We did one swap starting in September 25 going to September 29, which was in the 360s. One starting in September 25 going to September 30 in about 377. And one starting in June 26 going to September 28
Any other questions?
Good business.
Any other questions for Miles? Oh, you're right, you have. Oh, sorry. Mayor Ben Bell.
Thank you, Chair. Just on that 4% target, which I think is a good target to have, that's 0.99 that we've got, 3.5 million. Is that going to hinder the progress of that? That comes off just as we enter the next financial year. How's that going to affect the overall 4%?
Sorry, that was a wee bit muffled. I didn't quite catch that.
We have one that's maturing on the 99% one, the 0.99%, 3.5 million. How's that going to affect the 4% target coming into the next financial year?
Yeah, so what I've got at the moment is this model takes account of any maturities that you've got and what the current rate is to replace it. To give you an example, what I've got is by December 24, so December this year, I've got the rate at about 450. And then the low point that we get to is, it's actually June 25 at about 3.9. And by June 26, it's about 4. And then by March 27, it's 3.95. And then it actually goes up because that's when the floating rate is projected to go up. And also you have some lower price fixed rate bonds and swaps maturing. But at the moment it's forecasting about a 1% fall within a year's time.
So just to get that clear in my mind, so we'll come down to about 3.5-ish, and then that'll mature and it will bump back up to around 4. Yeah. Okay.
3.9 will come down to if rates, floating rates follow the projected trend, or if we can actually lock in those floating rates with the fixed rate swaps. So that's my intention.
Brilliant. Thank you.
Any other questions for Miles?
Joel's got one more.
Oh, John.
If swap rates went really low, would you lock in another 30 million swaps?
So was that if swap rates go really low, should we lock in another 30 million? Oh yes, we're looking. I mean, I'm looking at opportunities all the time. So the rates are about the same as what we did last Friday. But if we do get lower rates with the Reserve Bank coming out next week, also the employment data this week, I think, and then the US Federal Reserve next month. I mean, if we get an opportunity and we get rates 20, 25 points lower, then yes, we certainly would, because we've got, I'll just refer to my graph again, we've got the potential to about, I mean, we couldn't do 30 million of swaps. We'd be outside the policy, but we could certainly increase the level of fixed rate cover quite considerably and also push it further out to get close to that 4%. But 30 million would probably be too much. It just about pushes over the top.
Any other questions? Well, thank you, Miles, for your report and your contribution.
Thank you. Yeah. Just a very good meeting.
Yeah, we better. Do we move anything on that?
Just what they received.
Oh yeah. Could I have Michael?
Mr Chair, I just have one question on the report itself.
Yes.
Under item 9, it says that we have no headroom if something unexpected happens. And what is the staff's intention to manage that risk? Because that's quite a significant risk. If there was suddenly a climate change event or something beyond our control.
Thank you, Mr Chair. One of the items that we are looking at and will be bringing to Council is the option to extend our debt ceiling. It doesn't mean we have to draw it down, but to become a rated council and to extend our ability to borrow. with the items coming up. So that's something we're going to work through elected members as part of our long-term plan discussions. But that's our thought process going forward. So we're busy working on some options at the moment to put back to elected members.
Just a comment here. Does our question for Ray? Doesn't our ceiling automatically go up with the rates going up? Because we put them up 21%, we would get another.
Yeah. So the headroom, the level of debt we can borrow does go up with the level of revenue that we project to take. However, we are still projecting to increase our debt by 5.5 million in the coming year. So any movement in the debt headroom is taken up with the new debt. So we've still got about that $6 million capacity in there.
Any other questions? Could have someone move that the report be received? Michael Chamberlain, seconded. Councillor Stringer. All those in favour, please say aye. Aye. Against? Carried. We now move on to the next item on the agenda, which is the health and safety and health and safety report. Is this? Yeah. General Manager, People and Culture. Nikki, could you want to speak to anything to this?
Through you, Mr. Chair. No, there's not anything really here that I feel I need to speak to at this point in time, but I'm certainly happy to take any questions regarding the report. It's fairly standard this month.
Does anyone have any questions for Nikki?
Through you, Mr. Chair, the Staff Wellness Day, which looks like a good initiative, what will people actually do and see? And
so the Staff Wellness Day is an annual event. This will be our third annual event for this. It's broken into 2 half days so that we don't disrupt any services. So for somewhere like the library, they can send some of their staff in the morning but then keep the library open, and then some of their staff in the afternoon and around the business. This year it was around what the staff wanted, and their focus was around their own well-being. So we're filling it with some sleep initiatives, financial management was one of the things that they felt they would like some support in these hard times, and we will be having some well-being sessions purely for our female staff and purely for our male staff. And that's usually followed by some local community involvement where the Heart Foundation, our SIT nurses come up and set up some stalls about wellbeing, and we share some moderate lunch together and then have a changeover in the afternoon repeats itself. So it's about bringing the staff together, addressing their social wellbeing and enjoying time as a staff, as a council. Often we pepper potted across our departments. This is an opportunity to bring us all together.
Councillor Stringer.
Through you, Mr. Chair. Are there any critical safety hardware devices that the council need at the moment, or such as like gas detectors or anything like that for staff?
We're still working through the gas detector. I believe that is in process. I may defer to Aaron. Have you got any update on that?
Through you, Mr. Chair. Yes, we are in the process of obtaining, we're waiting to take delivery of a new gas detector system. The new system will monitor a lot more of the chemicals and contaminants that are in the systems now than what we have had before. So.
Any other questions? Just one thing here, there's a couple of, sorry. Councillor
No, it's
Reid.
not a question. Thank you, Mr. Chair. It's just a comment to the manager. If maybe next time we could have some legend around what the acronyms are for the uninformed. Thank you.
No problem.
Just exactly what I was going to say, Councillor Reid. What does TTM mean? Yeah. Okay. Yeah. Okay. Any other questions or comment on this report? Will someone move that the report be received? Moved Councillor Gardine, seconded Councillor Paul McPhail. All those in favour, please say aye. Against? Carried. Next item on the agenda is the aged debtors profile. Michael, would you like to talk to this?
Through you, Mr. Chair, I'll take the report as read, and I'm happy to speak to any questions from the committee.
Does anyone have any questions of Michael on this report? Michael Chamberlain.
Through you, Mr. Chair, a general question. With the cost of living crisis across all financial aspects of the council, are you noticing a tardiness in payment, or is it not affecting?
So in the previous report, we did actually have the amount of direct debits that were failing each month, but I didn't. Our rates officer was away when I produced this report, but it has been going up generally, maybe 5 extra a month or 10 extra a month. Lorna might have an extra.
Through you, Mr. Chair, one thing to note is the graph on page 27, where we compare because the rates indicated and the rates payments are a good, I guess, gauge on where the community is sitting. 2 years ago, the outstanding amount was 2.34% of our rates, and this year it's 1.5. So it is up slightly on last year's 1.23, and we have been noticing a lot more people have called in. So we are working more closely with our ratepayers on options. We've seen a significant uptake in direct debits, which is what we're recommending to our ratepayers, is to help smooth it and align it with their income coming in to set up a direct debit. So we've had a lot more direct debits. We've had a lot more people from the community come in and already apply for the rates rebates. So yeah, we are seeing a lot more communication in there, and our team is working really closely with those who wish to contact us and discuss it. So,
just a comment, with the rates rebate, the unfortunate thing is the people who rent can't apply for the rates rebate, I believe, because their rent is through their landlord, but the landlords are putting the rents up by the cost of our rates, like $15 to $20 a week, because there's some low-end flats people administering have spoken to me about it and having to increase the rates for these people just to break even by $18 a week. So it's quite significant, and a loophole probably in the system that they can't get the rates rebate. Through you, Mr. Chair, some of those people may be entitled to accommodation supplements. Yeah. So that's where we would be directing those type of people to go to, is to actually talk to your local WINS people, talk to the Ministry of Social Development, and look for opportunities to get accommodation supplements through those. That's what I did suggest to them. Are there any other comments or questions regarding the report? Would someone like to move? Oh,
I guess more of a question, thank you, Chair. Not question, comment. It's somewhat surprising to see that there are no over 90 days overdue, which is really pleasing to see. So just thank you to our ratepayers for paying your rates on time. Does save us some money in the long run, and let's hope we can keep on track. And well done to the team for chasing that up. That's some really good work. Someone like to move the report be received? Move, Chair. Mayor Ben Bowell, seconded by Michael Chamberlain. All those in favour say aye. Against? Carried. We now move on to the management accounts as at the 31st of May 2024. I don't see your other part. So, Lorna, would you like to briefly speak to these? Through you, Mr. Chair. Again, it's the same explanations as we've been providing in previous months, and it'll be the same at year end. The key drivers for the variance are depreciation at 1.5 million and interest costs at 800,000. So combined, that is 2.3 million of the 2.6 deficit, which is 88% of the deficit we're facing. I'm happy to take individual questions, but I'll take the report as read. Is it Michael Chamberlain?
Through you, Mr. Chair, given that we get the explanation about depreciation. Are we not allowed to restate our budget and therefore eliminate, because from a risk management point of view, if you end up with consistently big deviations, you can't delve down and say, what is the problem? I have to get out last month's report and compare it, and it takes a lot of work. That's one question. The other question I have is internal overheads. What goes into that number, and why, if I add up all of the individual sectors' accounts, does it not add up to the total?
Right. Through you, Mr. Chair. Firstly, on restating the budgets, we're very bound by legislation. At the time we set the budget, the full implications of the depreciation weren't known. Under legislation, we cannot restate the budget. What we can do going forward, and what we intend to do going forward, is reforecast. So we're going to, with some developments and improvements we've got and with the team on board, we're looking at reforecasting. So as part of our management accounts, we can forecast ahead and show you where we're likely to end up. In relation to the internal charges, not all the departments are shown in all these reports. Some of them were minor, and the variances were very, very small, so we haven't captured all of them. So internal audit overheads tend to capture all your corporate, all your IT costs. So in your corporate, you've got finance, you've got HR, you've got communications, you've got your senior managers. All the photocopying for the organisation comes through corporate rather than going out to the departments. So the overheads then push those out to the departments. Within Three Waters, Parks and Regulatory, there is also an internal overhead for the administration for there that gets pushed down to the areas as well. So it's a complex area, but those are the main components of it.
So there's another department or departments that's missing, because that must add up to 400 million, which is quite a big number.
No, not 400 million, 400,000.
400,000.
Yeah.
I'm just trying to remember which ones I have got in there, which ones I haven't. So we haven't, I'm pretty sure I didn't put civil defence in. It may not have events in there. The visitor centre, I don't believe, is in there either. So there's a few smaller departments like that where the variances weren't material enough to include, but we're happy to include accounts for all, just for completeness.
Are there any other questions about this report? The loss on disposal of asset in the multi-sports centre, which was the Matara pool, just point out that's a non-cash unfavourable item. You just have to write off when you have an asset that you knock down. You just have to write it off, so it just comes out of the books, but it doesn't affect the bank balance, which is always a concern to a person like me who's an accountant. The bank balance is not affected. But the 108,000 loss on disposal of the asset for the demolition would have had been paid for, so that was a cash item out on the Tara pool, and one's in the property department and one's in the multi-sport department where the asset would have been based. Yeah. Oh, Mayor Byrne.
Thank you, Chair. Got a number of questions, so bear with me. Starting off on page 3 with subsidies and grants, the budgeted levy revenue, is this budgeted for moving forward, or was it a one-off? How did that come about?
Okay, so at any point in time, we're not sure what the Ministry for Environment will send back to us. So we had budgeted an amount, but not enough. So we have received more than we had anticipated. It is budgeted again next year, or for this current year. But again, until we know what is going through the system, then it's very, very difficult to project ahead of time. We are working on, and again, it's an area where we are low in resources. So if there were more resources in the area, we could spend more time in trying to predict where that might head.
Thank you for that. And with the higher than expected trade waste user charges in the MVM Industrial Hub, is that a one-off, or is that continuous? How has that been caused as an uptake?
That is dependent on the costs of maintaining that. We've actually done a recalculation at year end. So every year we do a wash up, and they are actually entitled to a refund this year. So whilst the initial costs were high, we always do a wash up at year end to make sure that the staff time, that the electricity and any other factors that go into it are fair and reasonable and have been agreed. So.
Cool, thank you. The contractors and professional services, the timing difference to the regional landfill fuse collection and recycling collection charges. What is that exactly? I recognise that Jason's not in the room, but I can follow that up with him if that's easier.
We can follow it up with them offline, but effectively that was one of the items that was missed last year as an accrual. So some of it has spilled into this year instead of last year. And the other one there with the maintenance of closed landfill, we have resource consents with Environment South on the remediation and returning back to a good state with closed landfill. So that's part of the cost this year that we've had with putting those in place.
Thank you. Moving on to page 7, I think, which is the demolition of the pool. Maybe it's page 8 actually. Is that covered, that unfavourable expense, is that covered by the Tulloch Park Stage 2 funding?
No, that was, I recall that a council said that had to come out of our operations budget, so it was not included in the Tulloch Stage 2 funding, and because the funding was for the development. There is an argument that it could be because it's part of putting it right and making it available to the project, but the council had decided that it wouldn't come out of Parks budget, it wouldn't come out of Mataura Community Board budget, that the council would pay for it out of the property budget.
Okay, I remember that differently, but that's all right, I trust you on that one. Moving on to page 9, the electricity for the Moonshine Museum, the $34,000, is that on top of our $40,000 grant, or is that inclusive?
Through you, Mr Chair, that is on top of the grant. So with the memorandum of understanding, the council had agreed to pick up the electricity costs. At the time that was put in place, there was the intention or the understanding that it would come under the penny per unit. The PowerNet have not agreed, or the power company have not agreed that it is a council organisation, therefore they will not extend the penny per unit agreement to it. So under the MOU, we are covering the full cost of that electricity.
Thank you for that. Then we have the depreciation on the Murowai Centre. So are we depreciating an asset that we're not using, or we're not depreciating that yet until it's in use? How's that budget line working at the moment?
Depreciation starts kicking in from the time that it's available for use. So the time that we finish the work, the asset starts depreciating whether we're using it or not. So that's the general accounting practice for how that works.
Thank you. And one last one for my brand of questions, sorry Lorne, is the $80,000 unfavourable in libraries. Just wondering how that happened, if it was under budgeted and we've got $80,000 worth of, is there an extra staff member that was needed, or how did that occur?
No, that's a pure budgeting error. Hand up, it was a budgeting error.
No worries. Thank you very much.
Okay. Councillor Stringer.
Through you, Mr Chair. Yeah, just going back to that electricity for the MOU, are we expecting that to double by the end of the year then? Like, we're just over halfway through the year and 34,000 over. Are we expecting that to be up around the 50, 60,000? Like, there's no year-to-date budget for it there, I see.
Again, the MOUs were signed at a time when, before the timing of the annual plan and the MOUs being signed were out of sync, so we couldn't budget for it. And again, if we had it would have been below. The period covered for that 34,000 is from October through to May, so it's effectively, what's that, 8 months worth. So if you project that out, then you'll get an indication of what it will be.
Councillor Gardine, then Councillor.
Is that 34,000 just for the one building, the Moonshine building, or all the buildings?
I would have to look into that one. It will be my understanding will be for the. I have to again. I will check. I'll check with Neil, but I think it's more the museum and that part of the building rather than the Motorola. But I can check the IPs and how many boards we've got in there.
Councillor Reid.
Thank you, Chair. I'm just wondering, given that the power company obviously have a vested interest in saying that we're not eligible to use that, what intention is there to actually revisit that or look at a different alternative so the council doesn't have to cover that and it should fall under the Penia unit?
Significant efforts were tried at the time. The previous chief executive tried multiple times and he was well versed with the legislation around with the actual case law on it. It is something that we'll be looking at internally on what else can be done, and it may be that there'll be a suite of options that can come through to elected members on what we do going forward. My understanding is the only way that the council would be able to have that is if it was if the distillery was ours and the council is not in the operation of running a distillery.
Any other questions on this report? If not, could I have a mover that the report be received? Councillor Rich McPhail, seconded by Mr Michael Chamberlain. All those in favour say aye. And against, carried. We're now at the end of the public part of the meeting, so we'll take a short break and then we'll move into the public excluded part. Okay.